know what set off the winding of these positions in the first place? Start from square one.
Right. Well, it would have had to be one of Bill Hwang's positions that suffered a lot. So, for example, it could be Viacom, which fell pretty significantly after a stock split. But what has come out since then, as you guys mentioned, I mean, look, banks really were in a panic state, be it the call that they organized to say, OK, don't move yet, don't upset the market. Let's figure out how to do this in an orderly fashion. But when you have someone like Goldman breaking the ranks, doing these huge block trades during market hours, if you talk to anybody that does these type of things, you don't want to do it when it will have the biggest impact on the market. But the fact that Goldman was so hurried, the fact that everyone else is trying to catch up afterwards, it really is every bank for themselves at this point trying to get rid of these positions.
Yes, well, I suppose it brings into the question of what is honor and communication. Do we understand that there's more to come? The scale of leverage here, what was it, a $5 to $10 billion fund? Scale up leverage, 50 billion. So is the pain trade done? Are we liquidated?
Yeah, I don't think we're done, Manus. There have even been some estimates that perhaps exposure was as much as $100 billion. And the fact that banks now have to sell into this market when these stocks have already moved, they're facing potentially a big loss. You might see more of a dribble come out of these block trades, rather. So I think it will take a while before the selling is finally done.
Dani, we've seen this happen before in the financial markets. Then there's always questions about what happens next. Or is there going to be more scrutiny? Is there going to be more regulation? What's the word on the street?
So to be clear, a swap trade, which is what these were, are not controversial at all. They're used all of the time. You're essentially having a bank take on the exposure for you, pay that exposure to you, and you're paying a fee. That's not unusual. This also is not LTCM. This is not a big leverage macro position that's going to have any really huge contagion effect. These are very concentrated. What is controversial, however, is if Archegos was using these swaps in order to skirt regulations in terms of having to report their positions, the fact that it was so leveraged, and what kind of hedges did they have? If they were just hedging using plain vanilla sort of indexes, perhaps that wasn't sufficient enough. So those are the types of questions that are going to be asked, as well if family offices should have to report more with the SEC, if they should face more scrutiny, especially if they're the size of Bill Hwang's fund.